All right, sorry about that. It seemed bad timing, I guess. My dog doesn't know it's the morning briefing. He just knows that he woke up and he needed to go outside right when I was starting to stream. Poor guy. So, we take care of that. Okay, morning briefing like we normally do. Start with a look around the world, what happened in the overnight hours. I tend to use Finance Juice. It does a good job at this. It also does a good job showing who's going to be speaking, and that's been a large part of what's been going on in the last week. The speakers, still job numbers, jobs. It's been jobs week. We're not seeing any speakers, but that doesn't mean that there won't be any today. We've been seeing a number of them just pop up. So, what you want to watch for during the day is Finance Juice to start showing you something like Fed speaker says this or whatever, because it'll be, like Kansas City president or Fed Speaker Daly. It'll say it like that, and it'll just be a list. So it'll stand out. You won't miss it. The 210 curve is still, that's the 30. That's the 2-year, 3-month. We're not looking too hot over there either, but the 210 is still inverted. In Y2K, the inverted yield curve had got down to negative 0.47. Right now we're at negative 0.35. During the 07-08 housing crisis, it was around 14 and 16 tenths. All right, after the PMI numbers, that's probably going to be the end of the rig count. I worked on the rigs for 20 years, and that rig count might change by 2 or 3 rigs every week. I really don't anticipate that to be an impactful event, but it doesn't hurt to watch the clock. We get around 1, look for that news to come out, and look for it to have any sort of message in the market. I don't think there will be, but you know, just in case. The consumer credit, again, another one that I don't anticipate, but it's power hour at that point. Anyways, you should be approaching with caution. So by 10 a.m., we should have the narrative on the day. And the only thing that would galvanize us out at that point would be news that we can't see coming and or a speaker showing up, chipping their teeth. You can see that the volume is really light right now. Everybody's waiting on those job numbers. Nobody wants to really commit and participate until then. So comparing where we are this morning with where we have been on previous mornings, at least lately, we're sitting at 51. And, in the last week, it's been in the 80s, 75s, 110, 104. Now, on this morning, we were at around a 67. That was on a Monday morning of this week. So a little light that morning, not as light as we are today. It is very likely that the news we get from the job numbers is going to define whether or not we stay the course in this range or we leave the range. The dominant thesis right now in the bigger picture is to watch oil and watch the dollar. If we see energy, especially oil, crude, start to get back above 90, 95, that's going to be the end of this rally that we've been working on in the S&P and the NASDAQ. With the dollar, the benchmark was 105, but we've been beyond that enough now that we kind of need a new benchmark. Do some work on it over the weekend and have a new number on Monday, hopefully. So the thesis is only one of three things that we can do: hold the line, maintain the range. That would be yesterday's high to yesterday's low, from 41.73 down to 41.37.36. With this base case argument, we're not at the highs and we're not at the lows. And there are a lot of pivot points that we would have at our disposal to trade through today's trading session. But it would very likely be a lot like yesterday's trading session: choppy, difficult. So if we're to have a range day today, yesterday will be a great example of the kind of day that we're going to have. Focus on the institutional pivot points: cash open, Globex open, Globex high, Globex low, intraday high, intraday low, the daily pivot, the VWAP. Even the previous week's high is within this zone that we're focused on this morning. So you'd have plenty of pivot points. If the numbers are absorbed well by the trading community, the job numbers this morning, we're likely to see a continuation of this breakout of the range. So we're going to be looking for a staged process. First, getting above the daily pivot again. Yesterday's cash open, today's Globex high, and then yesterday's cash open, or yesterday's high. Now, in the middle of all of that, or added to that, you could add the RTH high of yesterday around 41.63. I don't really see that it's needed, but we've been responding there earlier this morning, so it's very likely that we may respond there again. After we break out of the high of yesterday, we got an ADR half at 41.88 and a full ADR at 42.23, and a round number, of course, 4,200, and then 42.11, the COG line, COG. Hmm. Atawi. We're only going to make that kind of run if the market likes the numbers to come out. It's really that simple. If the numbers come out, or if we get a speaker today, and remember, we don't have a speaker listed anymore, but that doesn't mean we can't get one. So if a speaker comes out, says something, one of those Fed officials chipping their teeth, that can get it done, or the job numbers can get it done. That's it. Anything else, we're going to just stick to range. The other argument is, what if the numbers come out and the market doesn't like it? Then we're very likely going to get back inside of the previous week. Again, it would be a staged process. We would first get back below the Globex open, through the Globex low that we have right now, the previous week's low, the Globex low of yesterday, the RTH low of yesterday, 38.2 retrace, ADR half at 41.16, and an ADR full at 40.80. Look how far away those ADR levels are. They seem real extreme, right? Like they just seem so far away. Only because we've been in a muted range now for nearly a week. But make no mistake about it, they are well within our boundaries, easily within our reach. We have a market maker move right now of 25 points. We've got an ADR of 71 points. Put those two together, we can easily make a 100-point move from our current location where we are right this minute by the end of the day. It really comes down to how the market is going to take these numbers. We are back inside the volume profile. We're sitting at the high of that profile. The point of control is up near us at 41.20. We've got some volume resistance at 41.55 through, say, 41.57. It's a nice 2-point zone. Gets a little shallow underneath that, starts to widen back out of the point of control at 41.20. If we break the low of 40.80, there's nothing to catch us, and we will very likely move through that zone real fast down to 4,000. We don't start to find any real volume support until we get around 39.50 ish. So if we break 40.80, 39.50 is the swing goal. Along the way, there would be some untouched points of control. Right now, they are well below that 40.80. So, we'd have to uh, bring in more than a 5x5 to get them. I've mentioned before that we need to carry them forward. The untouched point of control for one of those is 39.75. Another one is at 40.73. So they're about 100 points away. And then there is another one at 39.27. So again, long ways off. Very likely not going to be messing with those today. But should we break that range and begin working our way back down, you're going to want to know where those volume profile point of controls are. We're looking at a daily chart right now. We're looking at next week's weekly expected move on a week to week basis. On Fridays, we have the potential to see the new week, even though it's not locked into place yet. Throughout the day, that box is going to move up and down with price. And Friday at the close, it'll lock into place and then it won't move. And that's next week's weekly expected move. What I like to do, even though it's a little early, it can still move around quite a bit. I want to see what the market makers are thinking about for next week. Are we in an elevated volatility? Are they seeing more volatility than we had this week or not? Is there a drastic change? And I got to say, it's a little bit bigger, but not very much, right? It's not standing out like, wow, damn, that's a big change. It's not, just a little bit of nothing, right? But I like to look, I like to see where we're at. Now, again, it's something you want to do over the weekend again, too, right? You don't want to, it doesn't really count yet till we close because that box is still alive. But after the close tonight, it won't be alive. It'll lock into place. It's dead. It's done. It is worth noting where we're at in this expected move. We've been holding near the center of the line. The center line, the gray line there, that's the close of last Friday. Price in the S&P has a habit of closing on one of these three lines way more than it's ever statistically should close on those lines. It's very likely if we get bullish today that we will run to 4211, the cog line, which would also be the anchored VWAP from the start of the year, which would also be very close to that weekly expected move. And then if things get really ugly today, if we do break below 4081, 4050 is the bottom of the weekly expected move. And again, if you think that that's too far away, just remember what the ADR is right now. The ADR is 4080. And if you add a market maker move to that, knock off another 25 points, that would be very close to 4050. It would be below the weekly pivot point, the weekly expected move, the ADR, it'd be below everything we got. But it can go there. It's well within our reach. I do have to say, though, if we break 4080, let me get the right spot here. If we break 4135, there's a retrace of 50%. That would be at 4127. I would anticipate a pretty serious reaction at 4127. Could get a real nice first touch play on that one. We're bringing back the afternoon streams. We're going to do them a little differently. There's been a request. Um, we used to stream in the afternoon where, I would build out trades in my portfolio, take them live, pointing out what I'm looking at. And generally, I would carry around 200 plus trades at any one time. So there's always something to adding in, taking out, rolling, adjusting. And we've been really shorthanded. I haven't wanted to stream in the mornings and in the afternoons. It's just, a whole lot of streaming. Plus, once I'm allocated, there really isn't much more to do, right? I mean, I'm already allocated. And there's been requests from people that said, well, even though I don't want the trade necessarily, somebody else might want the trade. And that it would benefit other people for me to, point out the trades that I'm seeing that are out there, whether I'm going to take it or not. Generally, I don't like to do that, right? I've always felt that if it's a good enough for me to tell you to take the trade or for me to suggest that it's a good trade to take, then I should be putting my money on it too. I've always felt that that's the appropriate way to go. If I'm not putting my money on it, why would I suggest or recommend that anybody else put their money on it? The pushback that I'm continuing to get is even though I might not want it, somebody else might want it. So I can't argue against the logic. Uh, it's just a point of view difference, right? So we're going to try to bring those in, get more afternoon streams, pointing out some of the trades that are out there, whether it's going to be short term trades, day trades, short duration swings, or even longer term buy and hold stuff like dividend buys and wheel strategies and things like that. So be on the lookout for uh, notifications in the chat. I'm going to give, as much of a warning as I can. I'd say a good 30 minutes to an hour. I should know, what my afternoons look like. And I will post into the chat, going to go live in 30 minutes or, going to go live in an hour. That'll give you as much warning as I can. And we'll stream in the afternoons, point out trades, trade ideas, things that I'm in or looking at, or that I think would be a good trade, whether or not I take it. Right. So if you guys are interested in that, let me know. I don't want to waste my time. Go in and fire up a live stream and start doing that and then have nobody show up. I'm not going to waste my time. Right. So if that's something you guys are interested in, kind of just throw it out there in the chat. Give me the heads up that it is something that has interest. So kind of gives me some validation to do it. Right. So there is that. I gotta say, when I was working a day job, I had a small account that I needed to grow out, and I grew that account out by finding trades in the afternoon. I was at a company that didn't want me on my phone. I certainly couldn't use their computer to do any of to look around on the internet, look at trades, look at the market. So I really only had break times: first break, lunch, last break in the afternoon. That was pretty much all I had. The account was too small to day trade, and I was so new I wouldn't have known how to do much technical analysis even if I had a computer or had the time to sit down and look around the market when I was new. So everything that I was trading was based on very simple logic. Will it hold and rise above this line? Will it hold and stay below this line? Spreads, simple things like debits and verticals of both sides, debit spreads, credit spreads, just simple, easy trades. They add up, right? $75 on this one, 150 on that one. You get 10, 12, 30 of those a week. It just adds up, right? Higher probability trades. You just keep stacking them on, stacking them on, stacking them on, building them up. That's the idea behind it. Really nothing complex, crazy. We're not going to get into like broken wing butterflies and skewed iron condors and skewed flies. None of that. Just simple, basic buy a call, buy a put, sell a call to buy a put, simple stuff like that. There are a lot of really great charts out there right now. And I'm personally not really, too excited about them, but I'm already allocated as much as I want to be allocated. I'm not looking for anything new. But I know a lot of you are. So that's the plan. Um, Generally speaking, I've never really enjoyed the idea of swing trading on a Friday, but that's not necessarily a negative, right? It's more of our own fear than anything else. Look at the charts, the way things play out from Friday to Monday. It really has no basis on the fact that it was a Friday or not, right? All right, so we got that out of the way. Let's see. There was also some talk about UOA trading. I miss it. I really don't. I don't do very much of it anymore since most of my day trades are done in futures trades. But unusual options activity is still a great way to trade, especially in the violent market that we're in right now. Right, for day trading, UOA activity is great. You're in and out in like 5 minutes, 10 minutes, and you're done. But it's exhausting. It's time consuming just sitting there monitoring the flow constantly, looking for that next opportunity. So that one's a little rough. Um, I I really think that one's just gonna have to stay on alert. But I want more of them. I want more of those alerts coming in on the unusual options activity because I think they have a lot to offer you guys, right? And me too. I mean, I miss doing unusual options activity. Come on, punk, you can do it. Bum bum bum. Today, What's wrong with my link? Something's wrong with that link. One of the nice things about TrendSpider is it has candle pattern recognition to it. So, like the Haramni candle, for an example, on the daily or on the weekly, turning on something like the Haramni candle is a really great way to, get a heads up. It's a great candle. It's a great reversal, but it's just one of, right? Above the stomach, Haramni, maybe a Marbozu. I think I went through there too fast. TrendSpider's got some really great features when it comes to alerts and things like that to save you from having to sit there all day long scrolling through charts and hunting things down. All right, so looking at the sectors this morning, everything's flat, of course, right? We're waiting on those numbers. Uh, we got someone over in the Bank of England right now chipping their teeth going on about gas prices and quantitative tightening. We have U.S. non-farm payrolls and unemployment coming it's just what, 30 minutes out. So we're getting some movement. We're getting a little bit of rock and roll in the sectors that we have now. That all of this is going to get reshaped right before we get to the open. It opens another hour and a half away. So the steps that we take during the morning briefing, I'm always early. I got to come in at 7:30 to do it because I can't do it at 9:30. You're going to want to repeat these steps as we get closer to the open, right? Look at the sectors that have moved in the pre-market. Let that be your guide for the names that you want to focus on during the day. AMD is at that anchored VWAP for the first of the year, right? So it just got above it. Uh, we're going to get rid of the multi time frame and just put it on a single time frame. That white line, that is the anchored VWAP from the first of the year. And although it got through it, it couldn't hold. That was back during the March FOMC, and then in May we had that other rally from the next FOMC. That didn't really get it done either. We barely peaked above it, and that was all it took, and it was back down again. Now we're there. We're at that spot. This is like a definitive line in the sand on the year. Anchored VWAP from the first of the year. We get back above that thing. Um, Strength wise, we put it in that kind of context. That's strong. That's a good, strong market getting back above that, especially if it hadn't been above it at all, that would have been better, right? Those earlier crossovers that failed, don't really like those as much. But we want to see it get above that anchored VWAP and preferably above that pivot around 110. If you go over and look at something like Market Watch from Investors Business Daily, the amount of institutions that are holding AMD have gone up, right? We always want to check like how many institutions are holding this particular company, and are the number of holdings or companies that are holding it now greater than how many were holding it during the last quarter. So that's one of the benchmarks that I like to see. The other one is increasing sales. On a quarter by quarter basis, are the sales getting better? Are their earnings getting better? If I'm going to go long, say in the chip sector, then I need to be able to parse out which is the better trade, this or NVIDIA or TSM, right? Which one is the leader in the peer group who's the strongest one in the group, who's got better fundamentals, because they're going to have a better outcome, better follow through on our swing trades. AMD's got some pretty good numbers. They're not the best, right? But they're pretty darn good. So we're lining up here for a good swing. I don't want to get in before resistance, right? So I'd really like to see it clear that 110 and maybe clear it, get above it, maybe give us the handle on the other side of it because that's a nice cup. We want to see the handle on that cup. For a shorter term trade, we just had a really big move. So now we needed to kind of pull back a little bit reflexively, right? You move that far that fast, you're very likely going to get some kind of pullback first. When we started this week, I was focused a lot on inside week breakouts. And you can see how the week had a really nice follow through, right? We opened gapped up on the week, faded back inside of the previous week just slightly, and then it's just been a beautiful run all week. Inside week breakout. As opposed to something like Intel, which might give us an inside week breakout today to the downside. Micron, inside week breakout 2 weeks. Broke through both of those to the upside. Really strong, real nice move. A bounce off of the 10 week, but we got that 20 week overhead. NVIDIA, inside week breakout. It was a double week, but the 2 previous weeks, the tops were basically in the same spot. So it's not as impressive as it sounds. Still, it was an inside week breakout. Nice follow through right into resistance and right into that 20 period moving average. So now we're kind of on hook today. See how that plays out. One thing that a market likes to do when it gets into that kind of resistance is it'll gap through it and then open in the RTH in the overnight, or it'll gap in the overnight and in the RTH it'll run. So we want to continue to watch this, watch it resolve that 20. How far away from the 10 we are is really important to me. Markets that get too far away from their 10, they often stop there or pull back there and come back towards that 10. So, I want to make sure we're not getting long in some good swing trades too far away from that 10. It becomes a little bit of an arbitrary benchmark. How far is too far? Which is why I built that indicator, right? All right, so looking at what's moved around this morning, you got to remember, right? We're waiting on the numbers, but Comcast is up this or down this morning. Meta and PayPal are all down this morning, at least 25%. I'd rather see 50% one way or the other, but until the numbers come out, 25 is about as good as we're going to get. Tesla is down also more than 25% this morning. That's a quarter of a percent is what I'm trying to say, not 25%. A quarter of a percent. Things that are up, Amazon continuing to expand after that earnings. It's just a phenomenal chart, way overextended. But hopefully we've all learned by now that markets can stay overextended for a longer period of time than we could ever expect them to. This has to pull back eventually, but I'm not going to try to short this sucker until it actually rolls the hell over. So, I've had, I don't know, probably 7 different people ask me when we're going to short this. And don't I think it's gone too far? And don't I think it's ready to? Yeah, yes, I do. I think all of that. But I'm still not going to put any money to go short until the darn thing rolls over. Right. So, keep your feelings out of it. Nobody cares what you think. Let it roll over. Then we'll short it. And it should give a pretty good pullback. Right. Just a little bit of patience. We had that wedge up in Qualcomm, and it started with a nice follow through. We started it, right? I would have liked to have seen it gapped out of that wedge and then run, not open and run out of the wedge. It's a distinction that matters quite a bit to me, but it is what it is. But now that we've got it, what we want to see, if the numbers aren't bad this morning, if those job numbers aren't trash, if we continue to rally, if we can get Qualcomm above 151 half, it'd be a nice long up to say 154, maybe 154 and a half, right? And it could do that in a day, right? It could easily get that done in a day. So I'm going to be watching for this one. I like that wedge, right? The longer we stayed wedged with those equal highs and higher lows, this thing was just winding up more and more and more energy. Well, I'm ready to see it pop that energy. Let's use it and see a good trade out of that thing. Costco might be a good one today if we get that red to green, right? We had that red candle yesterday. When I'm looking at red to green plays, I like to see a good trend in place and then a pullback to give me that that red candle. The fact that we were getting lower highs and equal lows gives us a little bit of compression, not very much, but we're primed for a nice trade here today. If the numbers aren't just total trash, right? I'm going to keep saying that over and over. We're going to be looking for it to open at least as high as the open of yesterday, but that's so close to the high of yesterday that I would take that too. So we get the TRB, red to green breakover, and our pivot points for risk are going to be the previous highs of the previous days. Right? They line up real nice and easy. Each one of those would be a benchmark. Well, we got that far. Can we get to the next one? We got that far. Can we get to the next one? That'd be a nice day trade today. If we manage to get all the way above, you know, 552 and 71, if we can stick that by the end of the day, I'd be willing to roll into that and then swing it. I would keep my day trade, but it'd have to get there. If it didn't get that far, I wouldn't hold it for a swing. It is my day to stream today, so I will be in at 9:15. Uh, gonna cut it loose here, and I will see you guys in the chat room.